What's up, everybody? It's your boy Esco, aka Edward, CEO, Commerce and Culture, the brand. Got on the take profit because we taking profit today, baby, in the market, recession proof. So thank you guys for watching. I'd like you to make sure you like and subscribe because I'm gonna drop some content that's gonna change your trading lifestyle, change your trading habits. I'm just gonna try to keep the video short and talk about a way on how you can make sure you can get in very low risk entries and high probability entries so you can max out each trade. This strategy will also teach you, and I don't want to call it a strategy, this is more so a means of confluence that you can use to stack up while building confidence in the trade before you get in. So without further ado, we're going to get right into it. The subject around this is going to be wicks and how we can pay attention to wicks, because this is where the banks are getting in. This is where the liquidity is. And if you want to ride the wave, get in and not be sweating, losing sleep at night, you got to pay attention to wicks. So without further ado, let's get it. All right, guys, so we're back. We're taking a look at the pound dollar. I'm going to show you guys how we can exploit wicks. When I always say, when in doubt, play the wicks, look at the wicks, because when you're confused about direction, when you're confused about, where you should be getting in, you need to keep in mind where the liquidity is, and you'll be able to find demand zones and liquidity by just paying attention to wicks on higher time frames. So I'm going to start on a weekly. Typically, honestly, I deploy this strategy more so on a daily, 4 hour and 1 hour. But just to give you guys an idea so you can kind of see on a larger scale, when I say you want to play the wicks, you want to look left and see where there's a lot of demand in order to make your entry. You want to look and see where structure is. So by structure, I'm sure you guys are aware of higher highs and higher lows. Coming up, we had some bullish pressure on the pound. We came up here, we had this bullish rejection candle. First of all, whenever you see, more times than not, when you see a full-bodied bullish candle in a wick, like a 1/4 length wick to the body, this means exhaustion. So this is a weekly. Obviously there was some more stuff happening before this sell-off, but this right here, this told me, okay, we're gonna go ahead and sell off. And looking at the previous week, or looking at months ago, if you just look left and see where the liquidity was last time, if you would have put it, say, here or here, you would have got nothing. If you would have put it in this area, anywhere here, you would have got nothing but wick entries, right? But let's say, we're not swing trading or we're not trying to trade on such a high time frame. We can still use this and play these areas in the future. However, we want to look for areas closer to price. So I'm going to look and see, we're down here at 134.06. Where is the liquidity? We have some liquidity here. This is kind of high up though. This is 80 pips away. You got to pay attention to your pips. Like, is it realistic? Like, what time is it during the day when this happens? Will we see even an 80 pip push up? It could be this one here. It could be 124 or 134.23 with this wick here. Oh shit, hold on. This wick here, right? Let's say we chose these two wicks closest to price, this one and this one. So we're looking at the market. We're gonna bring it closer to price, and real quick, we're just gonna skip weekly. I'm not trying to make this video too long. Really, you want to scale down and analyze each time frame that you use. I don't use every single time frame, but I use a good majority. On a daily basis, I'll at least look on the daily, the 6 hour, the 4 hour, and the hour. But really and truly, when you're getting these entries, to get the best entry, you want to start from at least a 4 hour or a daily, and then work yourself down. You could execute it off the 1 hour, but if you want to get the best wick entries, you get that baby on the 5 minute. You get that baby on the 15 minute. I don't really mess with the 1 minute like that, but you could do it. It really just depends on your skill level and how much you're willing to risk. But the whole point of this is to not risk a lot. So we're on the daily, right? I want to pay attention to our zones. demand zone. So there's a demand zone here. You can see price reacted in this general area rather abruptly, same as here. So there's a lot of you know, strength in this zone here. So looking at the market, we can see we have a breakdown in structure. This low is broken, this low is broken. We're not making higher highs, so we're going to look for shorts. The question is, when do we get in? So we have these zones drawn out from the wicks. I mean, this strategy is pretty damn good. You want to use Confluence and measure it up with other things. I mean, you could put a fib in here too, to see where it goes. Putting it from, I mean, that's not a good one on a 1 hour. Let's see, we could do a 4-hour fib from this high to this low. And let's see, that's a little bit high up, honestly, but we'll see. All right, so we're gonna let it play out. 75 would be the best case scenario, but that's a little bit high for price. I'm gonna look, where are we at now? 34.47. So yeah, we'll see. 75 looks like a good zone. So we're gonna see if we could play off that area. We're gonna go to a 1 hour and let it play, and let's see what happens. So again, just to recap, you want to look at your higher time frame wicks, pay attention to structure, and this will also help to validate or invalidate your bias. So once we get it to play, let that 1 hour candle go. Let's see. So you just want to wait. You want to be patient. And if we miss it, we miss it. So look at that, right up to the 618, pretty damn close. Oh, and then we're activated. We hit the red. All right, so now we're getting in here. And we could put in a 20 pip stop. I like to use 20 pip stops. Wait, shit, hold on, 80. No, all right, so we got stopped out. All right, we got stopped out. All right, but I'm not using my other confluences. Let's see, I don't think we're gonna break above this. This is like an 88.6 fib. I just don't have it drawn out here, but look at that. And see, you can play it more than once. If you don't get it the first time and you think like it's too early, because like, look, let me just pause this real quick. Although we got the test of this zone, this is, oh shit, it's still going. This is Asian. This is Asian session. One thing you have to keep in mind when you're trading is don't trade, I don't want to say don't trade Asian. It really depends where you live too, but don't trade sessions that are not conducive to your strategy. I myself, I only trade London. I trade pre-New York and New York. I might not trade all of them one day. It just depends. Sometimes I'll, be in and out of both sessions. I'll get up 4 o'clock, scalp the market, get in or get in and get out by 6. Usually you'll see reverse in price around 6 o'clock. I'll get in 6:30, 8:30 around that time, like pre-New York, beginning of New York. And then my last entry is usually after NYSE. So yeah, so we see here the time was, this is Asian session time. And then we go over to midnight, and then London comes around. London right here. London right at the 88.6. And see, we got our bullish wicks. Wick here showing weakness. And then we have the 88.6, boom. And then let's say 6 o'clock comes around. I'm just waking up. I'm going to enter here. And then I can put in a 20 pip stop, right? 20 pip stop. So these are some big wicks here, like 80 and then 20. So 20 pips would have been up here. And, if we would have executed here, we would have cleaned out for how many pips? I mean, damn, that's, what I'm saying? That's 70 pips, 70 pip move by New York. So we're in at 9. I mean, realistically, I would have probably, you don't even have to get in exactly at the red line, but like right here, let me show you how you could have finessed this just to make sure. You could have played a fib. You could have played it a couple ways. You could have played it like this, you know what I'm saying, and wait for a close under the 23.6 and get in at this wick. could have put a sell stop right under here, you know, if you waited a little bit. Or if you wanted to be more aggressive, we could have put this on a lower time frame and put it like this. Put the fib like this from this high, because you see this is high, low, high, low. If you scrunch this up on a smaller time frame, you'll see that this was a low, and then we made another high here. So we can draw the top of the fib here, bottom of the fib here, and this is all 618 entry. So you got multiple confluence here. Once we got in, you can see 70 pips. And where would we get out? Let's see. So same thing, wicks. We're gonna look on, let's say a 4 hour. Let me get all these fibs out of here. It's looking messy. So I mean, realistically, this is what you want to be your overall target, but you know, it really just depends. After 70 pips, I would have been out. 70 pips, I'm straight, bro. I don't need to hold that. I mean, if you look at the fib realistically from this high to this low, it's been completed already. So, and plus we just got on a 4 hour, we just got a rejection wick. So you could try to play it, but it's 11 o'clock again. You have to pay attention to time. Do you want to put yourself out in there and hold the trade for another couple hours? Most people don't. So we're gonna let it play and see what it does. I would have gotten out, but let's say if you were to play this wick here, let's see how long it would have taken to catch that wick, or if it even does it at all. Let me go on a higher time frame. So yeah, I'd probably play this one here at 33. Let's see if we can get to 33. Let's see. Let's see if we can get 33. Look at that. Look at that. Look at that. Ooh. Let's see, another time. This is going into the next day. So you could have used this wick here and got in. Use a benchmark to get in again. And then there we go. There we go. 86, you know. It's simple. And it kept going. Kept going. And this doesn't mean it's going to stop. This is just a safe place for you to get out. You know what I'm saying? Because you want to secure the bag. You can keep trading, keep being greedy, trying to get, you know what I'm saying, 100 pips. But like this type of move to happen within 2 days like that doesn't happen every day. So you don't want to try to hit it out the park, hit a home run every time. If you have the account size and could afford to hang on to a trade like that, by all means, you know what I'm saying? You just cashed out. How many pips was that? 150, 160 pips in 24, 48 hours? Stupid. Just off that one little strategy alone. One little strategy alone. So I don't want to go too much into it. I was trying to make this video short. If you like the content, if you like how I break stuff down, I'm still kind of new at this, so I'll get a little better over time. I'm not really much of a teacher, but I just want to try to break it down as simple as possible. You know what I'm saying? Make it something that people can relate to, something that's easy to understand. And we're going to have a lot of fun with this. Eventually, we're going to start talking about other topics. The brand is Commas and Culture, so we integrate finance and lifestyle. And I don't want to get too much into it, man. Like and subscribe. I'll catch y'all next time, you know. Peace.
Yeah, that's right. What? OJ. Yeah, can't say. Yeah.